Hey, what's happening? It is Friday the 11th, and just kind of piggybacking off of what we talked about on Tuesday with inflation doing what it's doing, a little bit of conflict between influencers within the Fed. What we're seeing today is, of course, more information. Actually, it was yesterday, more information coming out that commenting on the CPI, showing inflation running hotter than it has since in really I think 1992. So that was when Bill Clinton took office, and then the inflation ran hot then. So this is about the hottest we've seen it run on the numbers that the Fed likes to talk about. So what's interesting is we saw yesterday, because of those numbers, the mortgage-backed securities just took a big hit and went really, really low here. But then as they started digesting the information and started saying, well, they're slightly better than what they were before, but they're not as bad as we thought they would be. So what they do, they ingest that and started taking that money and dumping it back into mortgage-backed securities, and mortgage-backed securities peaked up above the resistance. In fact, we fell below resistance at that point, but we at least got quite high, and we did peak above the 100-day moving average, which we haven't been above the 100-day moving average in some time, as you can see here. Now, we've been below the 100-day moving average for a long while. We've only had two spots in the last little while where we bumped above it. Yesterday, we reached above that. Now, whether or not we're going to punch above that in the near future, kind of hard to say. Those averages start acting as ceilings for traders, right? And they see them hit that, and we see that they're, technically speaking, we've not been above that average in a long time. They tend to sell off. It's a worrisome position, or they might even have positions already, sell positions placed for that. So that's just something to think about there. Interesting thing with respect to this capital flying in there, and why it would fly in there when typically when inflation's running hot, that's not a friend of bonds. And why would bonds go that direction? Well, let's look at this. The Wall Street Journal came out with a story about how banks are telling the corporations no more deposits. We don't know what to do with it. There's just no place to put all this money. There's so much money supply in the system that they're turning away deposits. There's companies holding billions of dollars in just in cash, and they're not putting that to work anywhere. So they got to put it to work somewhere. Now, we do know the Fed is kind of cooking things. In reality, we start looking at what's going on with the interest rates. It's because the Fed is dumping in trillions of dollars. Now we have companies with money available, probably putting it in there as well. They've got to invest it somewhere, because just sitting in the bank's not doing anything. And when you have banks saying, we can't use it, so we can't pay you any more interest on it, that right there is another thing that is going to be a reason why people are not going to have we're going to have this capital going into different parts of the market. Don't make as much sense as you would think that it would, to go out there and buy into mortgage-backed securities when the yields are so low. And so the 10-year Treasury also extremely low in this environment. So when you start looking at what's happening here, we understand that the Fed is basically manipulating the yield curve, keeping it low, keeping those yields low. We have extreme monetary supply out there. We have banks not accepting deposits or trying to encourage deposits to go elsewhere. So this is what's keeping things artificially low, because of all this extreme supply of things. Just look at all the factors, right? Take all these things in and start understanding why things are what they are. So what I tell people is take advantage of what we've got while we've got it. So here's another really, really cool announcement that I wanted to be able to share. So everybody is familiar with this tool, how I have put this out there to the world via the videos here, if you will. And we've talked about how your payment over time gets eroded. You can see how 360 months from now, the $405 a month payment on a $100,000 property with 20% down at, let's say, a 4.5% interest rate. If that started your first payment today, 360 months from now, that same $405 is equal to $37.07 if you factor in an 8% inflation. I'm using 8 because we're running hot inflation right now. Before I used 7, now I'm using 8. That's because inflation is pushing 12+%. If you really want to look at like John Williams shadow stat, study that. That's what I'm seeing. Study it for yourself. So that means that a cumulative value of $145,925.37, which is the principal and interest paid over 30 years on an $80,000 loan with a 4.5% interest rate. But when you recalculate every dollar spent over that 30 years based upon an 8% inflation, looking at $55,242.28. That's what value of that. So why am I talking about this again for the, bring it up like crazy, right? It's because a lot of people have asked for this this, I'm pointing to my screen. Everybody's wanting this particular tool that I've got there. Well, now I've got the app. So this particular app, guys, will give you the opportunity to go in and do the exact same numbers here. All you're going to put in is just a down payment, the purchase price, interest rate. I've already factored in the 8% inflation. If you want to put an additional payment, see all I do just to see comparison, you can calculate that puppy out. Got all the information right there. That's what you're looking like. So it'd be worth taking a look at, understanding this. You can see after inflation adjusted data, inflation adjusted payment, the payments that you're, the payment that you're making, it gives you all that information. So that right there, also you can go and advance it. Let me get in here. You can advance it here. Got to get it to recognize. So that's going out 30 years. This is just going to show you the annual on this particular version. You select that date. Now it's going to tell you what it looks like in 13 years. Gives you the exact same information in 13 years. So my app builder's got that done. So here's what I'm going to do. This is this version right here is in beta test. It's not released quite yet. So if you want to be one of the beta testers, I'm going to put it out to 10 people, right? And email me, aaron.chapman at snmc.com and ask, I want, and put in the subject line, beta test app. That's what you want to put, is put yourself in the first 10. I want to get that to you. I want you to test it out. I want you to give me an idea of what you're looking at. And this, I want people with that's got, you got some investment properties already, figure out how this is working for you. Give me ideas. We'll set up a call with you 10 and I will go over the app with my app builders on what you can use it. There's more calculators than just this. There's the asset reserve calculator. There's calculating the cash flow off of your Schedule E, so you know if you're overdoing it on your deductions and putting yourself in a negative position for future qualifying. I've got, of course, that amortization calculator, and then the ability to calculate the reserves on the subject property that you're buying. So these are all calculators that lenders use, but are not released to the public. It's now here. So I'm getting this out to you. First 10, we can get a call. You guys can play with it. Give me feedback on how we can adapt it. You guys, when we get the paid version, because there's going to be a hot rodded out version coming. I can't say when. I mean, it took us a long time to get this built, but those 10 get that first year free on that one for being the beta test and give us some feedback on this. So I'm looking forward to seeing those emails come in. We're going to keep a list of everybody who wants it, but the first 10, we're going to beta test it with you. And then I'm going to get you all the app once we've done that beta test. It'll probably take about 2 weeks to do the beta test. I'll get you all the app. So thank you guys for watching. Thank you for subscribing. Punch that button, pass it out to your friends, especially pass out the app because this is going to be a game changer, I hope. And we'll see you guys on Tuesday.